All right. Welcome guys to Sesky Trades once more. All right, so let's begin with today's topic. Okay. All right, so yesterday we spoke about risks. So today we're talking about trading professionalism. Okay, trading professionalism, the power of boredom, basically. Okay, so basically, what the topic, what I mean by that is how good entries feel boring. That is just the theme of today. All right, so we're going to begin now. So, like I always say, this stream is purely educational. No signals, no prediction, nothing. It's just educational. All right, it's no financial advice. So, this is just an educational stream powered by LBank. All right, so like I said, LBank, or I've said before, LBank is my trading platform of choice, and I want you all to go register and join LBank with the link you see on the description of this live stream. Okay, join LBank there, and you enjoy some special bonuses if you use my link to join LBank. All right, so that being said, let's dive in. All right, this is a deep dive into execution psychology. Why the best trades feel like nothing, and why excitement is the leading indicator of failure. All right, why excitement is the leading indicator of failure. All right, today's topic is basically uncomfortable. It's simple but uncomfortable. All right, today's topic is very simple but uncomfortable. All right, why good trades always usually feel boring. Okay, today's topic is simple but very uncomfortable. Why good trades always feel boring. Okay, so like I said, this is purely educational. No signals, no prediction, no financial advice. We are here to understand behavior, not chase outcomes. All right, we are here to understand behavior and not chase outcomes. All right, as I said, All right. So as I was saying, today's topic is basically a simple one, but a very uncomfortable one. All right. So why good entries usually feel boring, and why confirmations and patience are what separate professionals from impulsive traders. All right. Why confirmations and patience and what separate professional from impulsive traders. All right. If you came here looking for excitement, today might frustrate you basically. If you came here looking for excitement, today will definitely frustrate you. So, but that's intentional. All right. Very intentional. All right. Most new traders believe a good trade should feel exciting. All right. The symptoms are familiar. Heart through the tick by tick. All right. Fingers hovering over the mouse. But that feeling usually has nothing to do with quality. Do you get that? Do you deep that, guys? Do you deep that? It has everything to do with uncertainty. All right. Most new traders believe a good trade should feel exciting. The symptoms are familiar. Heart racing, eyes glued to the tick by tick. All right. Fingers hovering. Feeling usually has nothing to do with quality. It has everything to do with uncertainty. It has everything to do with uncertainty. Hmm. You think you are busy, you do your analysis, you sit down on your chair, and you see one slight move and boom, you want to get into the trade. You think you are you are doing yourself right. You think it's something that because you look busy and it looks exciting, you think that's the right trade. And don't mistake that for quality trades. Most quality trades feel boring. That's what we're basically talking about today. Most quality trades feel very boring. Okay, most quality trades feel very boring. Like I said, that feeling usually has nothing to do with quality. It has everything to do with uncertainty. All right, so let's define what exciting actually usually means. All right, price is moving fast. Basically, price is moving fast. You feel that you will miss the move, and boom, you want to get into the trade. All right, you don't have any confirmations. You convince yourself that okay, you have to make this move when you see the price moving fast. Excitement in trading is fear wearing confidence. You can see that excitement in trading is fear wearing confidence. That's what it is basically. Excitement in trading is fear wearing confidence. When price is moving fast and you feel like you might miss it, you are not analyzing, you are emotionally reacting to speed. All right. You are not analyzing, you are emotionally reacting to speed. Okay. You are not, I'll repeat it again. Excitement is fear wearing confidence. When price is moving fast and you feel like you might miss it, you are not analyzing, you are emotionally reacting to speed. All right. Please let that sink in. Hmm? All right, so here's basically the problem. All right. Early entries feel exciting because nothing is confirmed yet. All right, structure hasn't shifted. Liquidity hasn't been taken. Bias hasn't been proven. You are just basically betting on anticipation, not evidence. That is what it is, basically. You can see the anatomy of early. The trap, anticipation. Early entries feel exciting because nothing is confirmed yet. Structure, bias hasn't been proven. Right? And the reality, the evidence. Okay? You can see from the diagram, it shows you the hope. When you enter on excitement, you are betting on anticipation. Professionals wait for the step. Alright, professionals wait for the step. Alright, you need those confirmations first before you enter any trade. No matter how exciting it looks, no matter how you see price racing up and down, you need confirmation. It looks exciting, but don't try it. Don't you dare. Alright? Don't you dare. It looks exciting, but don't you dare. Okay, please don't dare. Early entries feel exciting because nothing is confirmed yet. Structure hasn't shifted, bias hasn't been proven. Hmm? When you enter on excitement, you are betting on anticipation. Professionals wait for the step. Okay? Professionals, as a professional, just wait for that confirmation. That is all I'll say here. Wait for the confirmation. Don't just get in because you think price will leave you behind. I repeat this every day. Maybe your papa get the market. Jonathan, maybe your father get the market. Wait till you see confirmation. Wait for the confirmation. Wait for a confirmatory entry before you enter. Alright, wait for a confirmatory entry before you enter. Maybe at the end, I'll show you an example of a confirmatory entry using the smart money concept. Wait for a confirmatory entry before you enter any trade. Alright, please. Alright, waiting feels uncomfortable because basically this is the psychology of waiting. Waiting feels uncomfortable because it removes control. Alright, your ego feels useless. Waiting is very, very uncomfortable for most traders. Understand? It removes control from you. Your ego feels useless. Alright, you're not clicking, you're not doing anything. So you feel very useless. Alright, your ego feels useless. Alright, impulsive traders need action to feel productive. That is just what it is. Impulsive traders need action to feel productive. You can see that. I need action to feel productive. Impulsive trader, I need action to feel then, but professional traders need clarity to be effective. Impulsive traders need action to be productive. Alright, but professional traders need clarity to be effective. That is just it. That is just it. Alright. Right. Excitement usually means you are early. Boredom usually means you are prepared. That is what it is. Excitement usually means you are early. Boredom usually means you are prepared. If this sentence bothers you, then you are learning. Do you understand that? If this sentence bothers you, then you are definitely learning. Excitement usually means you are early. Boredom usually means you are prepared. Excitement means you are early. Boredom means you are prepared. Alright? If this sentence bothers you, then you are definitely learning here. Alright? That's just what it is. Alright. So I need not say more, it's self-explanatory. You can see that from the slide. Okay. Alright, so let's quickly open TradingView so that I can show you. As we can see, we are on the SUSDT perpetual contract. Alright, this now. When I get on TradingView, when I want to do my analysis, I'm not looking to trade yet. What I want is I'm looking for basically information. I'm looking for structure. Alright, I'm looking for something that hasn't happened yet. I'm just looking for information. You understand? So I look for it. I'm not going into trade immediately. Check out the information now. Okay, at first glance, if you understand market structure, you know that okay, this is looking like it's going on a downtrend. This is a daily time frame of Ethereum. It's going on a downtrend. All right. So we look at this first. Look at where is the direction of the market going to? What's our bias for the day when we want to trade? What's our bias for the day? All right. You can see on trading room now. You can see that yesterday. Let me see. See, if you can see from here, we are basically on the ranging market. Between yesterday, day before yesterday, and today, price hasn't really moved significantly. All right, but a few days before that, we had a red candle. This was a big red candle. You understand? But for today, you can see around here, the price is just ranging. All right, so I've gotten this info from here now. What do I do next? Since I'm on the daily time frame, I go lower. I usually like trading with the 15 minutes time frame. Then I'll now confirm. So I go lower. Excuse me. Okay. All right, from here now, you can see that price is actually ranging. We've not see, okay, see, this is our swing high. Even if we go back before then, like those days I showed you a few days back, we're actually on a downtrend. We went down, then we started ranging for a while. It looked like we're going up, but nothing really. We have a swing low here, swing high, swing low, swing high, swing low. It looked like it was going up. We had an uptrend, a mini uptrend here. Oh, a massive uptrend, not a mini. All right. So you can see we have our swing high here and we have our swing low here. Now, anything that happened in between here is internal structure. All right. This is the info I've gotten from this. And we can see that we are on a price range. Price is just ranging. It has been ranging for the past few days. No serious impulsive move. All right. So that is the information we have gotten from here. Hmm? So we just wait for a confirmation if we want to trade, whether it is going high or low. We always wait for that confirmation. Okay. You can see we are on the range right now. All right. It went down a little bit to this point, which is internal. It has not broken structure. For we to confirm that we are continuing our downtrend, it has to break this structure. It has to break here. Change of character. Price has to come down and go below this low. Now, if we confirm that we're on an uptrend, it has to go up and break this. Then we now confirm we're on an uptrend. All right. But for now, we can see that we are in between. So till price breaks either of this before we get a confirmation on when to trade or when to enter our trade. All right. For now, it is ranging. Now, this is an information I've gotten. So I wouldn't just see one impulsive move without getting this information and say, okay, I'm going to trade without studying. All right. Without checking where liquidity is. From looking at this, we know where liquidity is, support and resistance. Okay. So this is just you analyze properly, you wait. So right now, I will have to wait for price to either break this low or break this high. Then I now wait for a confirmation that okay, after it has broken this high or it has broken this low, I can now enter the trade. That is just it. I wouldn't rush and go into any trade. I wouldn't rush because I saw one impulsive move. Maybe if it goes down and breaks, I need a confirmation first. I need a confirmation. I wouldn't rush into this trade. So right now, I can't even get into the market here. I'm waiting for that confirmation. So that's just what it is. Okay. So yeah, you don't just enter trade anyhow. So let's get back to our slide. So what is confirmation basically? You can see the pronunciation confirmation. All right, price paying a price to move. All right, the act of trading the reaction, not the prediction. All right, the act of trading the reaction and not the prediction. All right. So your prediction, okay, price is going this way, but your proof is somewhere in front. You understand? You wait for that confirmation. You trade there. All right. So that is what this is just basically telling us. Like I said, the mode I use to trade is smart money concept. Smart money doesn't predict, they react. They let retail traders rush in early during the volatility, and then they enter only after price has proven its direction. Alright. Smart money enters only after price has proven its direction. The same thing I just explained to you on TradingView, and the same thing I'm just basically saying here. Most of the retail traders, you see them, they enter here, you get, they just rush when they see an impulsive move, boom, they enter. When they see an impulsive move, volatility chase basically. Volatility chase. Then they now put their stop losses around there. You get early entry, early entry, early entry, you can see. Alright. But patience, smart money, observation, proof of a strategic edge entry and a confirmation. Before I now get in. Hmm? Like I said, smart money doesn't predict, they react. They let retail traders rush in early during the volatility and then they enter after price has proven its direction. Alright, let's talk about missing trades versus forcing trades. Alright. So missing a trade basically feels painful, but forcing a trade feels active. You understand? You miss a trade, you say, wow, I missed this trade, I missed that move. Yes, it feels painful. When you force a trade, it makes you feel active. But what are the consequences of both? One basically just costs opportunity. The other one costs capital. Basically, you might be very wrong, of which most 10 out of, okay, let me say 8 out of 10 times you will usually be wrong when you just enter impulsively. All right, 10 out of 12 times you'll be wrong. All right. So like I said, one cost opportunity and the other one costs capital. All right, the cost of doing business. Mysteries you can see from a diagram here, my illustration. Cost $0. Ego bruise, first trace, cost capital, account damage. Mysteries don't hold accounts. First trades do. You can see that. Mysteries don't hold accounts. First trades do. Alright.